Welcome to TheoTrade. This is Don Kaufman. Here we are. It's March 6th, 2017. We are looking at the markets just a few moments after the close. And really the theme today is, the door, it's wide open. Ultimately, will the bears actually take it? And I'm going to show you why, what I call, the door is wide open. Will the bears take it? First and foremost, the S&P is a little weaker today. We're down just about here, again, a few minutes after the close, down about 7 handles. That's 7 points in the S&P futures. Now, when I say the door is open, and I got to tell you, the door is wide open right now for the bears. And that has a lot to do with something that we have not seen really in 4 months, okay? Since you have to go back to very, very early November to see full-blown correlation play out inside of the S&P 100. And allow me to explain for just a moment. I've talked about this extensively on these Theo Night videos, and I've talked about it extensively to our TheoTrade membership. But one thing you look for as a more experienced trader, you look at the S&P 100, right? So why not the S&P 500? First and foremost, the 100 companies, these are the 100, it's the largest market caps out there. They're really what move the market, right? The S&P 500 is market cap weighted, meaning the bigger you are, the more you really mean, right? The Apples, the Googles, the Amazons, those are what really move the S&P 100. Well, one of the things that we look for specifically in the S&P 100 is what I'll term kind of full-blown correlation. What's full-blown correlation? Well, right now you can see at the close, we had 75 decliners, 26 advancers here in the S&P 100. We opened today and we actually had 95 to ultimately 5. Okay. Yes, there's 101, but Google's counted kind of twice in here. But we had 95 decliners here. And that to me is that kind of quintessential all down day. It's also something we have not seen in the last 4 months. You have not seen 95 decliners at any point. And this morning, again, as I said, the door is wide open ultimately for sell side activity. And I call it doors wide open for the bears. Will they exit stage left? I also kind of prefaced some of this is right now in overall markets, okay, we're at a interesting crossroads over here where you're going to feel like, and again, working in order, you're going to feel like no matter what it is that you do, and this is when markets can really, again, kind of torment traders. It's going to feel like no matter what you do, whether you're bullish, whether you're bearish, you're going to feel like for a period of time here, every move that you're going to make is going to be the wrong one. Markets, okay, according, again, to the S&P 100 and that correlation, they just snap back and normalize today relatively out of the blue. Let me show you another area, okay, that has really struck me today. I think it's critically important. The XLF, okay? So if you go to the XLF, it's down, look, it's a whopping 19 cents today, right? It's what? It's about 0.7%. I do everything in percentage terms because it makes it statistically significant. Who cares? Doesn't matter. 19 cents doesn't even matter. On a percentage basis, that's what matters, right? This is pretty much one of your weakest sectors today, which we'll look at. It's the weakest of the big sectors today. So 0.7%. Ooh, you're saying like, Don, who cares? I'll tell you why it matters. Why is the XLF down? Okay. The bonds, they're flat to negligible on the day. You didn't see a rally on the bonds to push the XLF down. No, the XLF just sold off on its own. So you got to keep an eye on the XLF in the coming days over here. Now, again, this is going to be trade where I'm telling you, it's going to torment you. We're very likely to sell off here, get bid back up, sell off again, get bid back up. Both tops and bottoms are always going to be a process. And I'm not like here to tell you we've hit a top in the market. No, but I am here to tell you the tone changed. The tone definitely changed today. And the fact that we saw that full-blown correlation, the fact that the XLF is fading on a bond market that is not per se rallying over here, okay? The Russell product, and again, if you're not familiar with the Russell futures, that's fine. You don't ever have to pull up, like I pull up the TF over here. So I don't know what that is. Just pull up IWM. IWM, okay, is kind of fading in the last couple of days right there with the XLF. Now, I do have short positions in both of those over here, but again, kind of a muted range inside of the IWM specifically today. Now, let me actually switch gears a little bit. So we talked about, again, doors wide open for those bears if they want to take it. So we could see some bouts of volatility as the week progresses. However, and here's a big however, you got to look at the SPX as the week progresses. And throughout the course of the week, we look at what we term expected moves. And these expected moves, they really need to expand. So if volatility is going to strike us, like you're not going to be just like, oh, awestruck and surprised. Well, listen, one of these days the market's going to open down huge, but we need to see expansion of the volatilities. Come on, 8.7%. You can't even get excited about this. But we've taken that first step, all right, towards, again, normalizing in the markets. We saw the advanced decline line off big out there. Now what we really want to see, expansion of volatility. Expansion, not just of the VIX. Come on, the VIX, that's my predecessor's, volatility index. I'm looking at volatility futures, which ended up down today. I mean, think about that. You got a day where the S&Ps are down. They're like, it's okay. We'll be just fine tomorrow. Wouldn't surprise me to see markets bounce back up tomorrow. But if volatility is really going to start to hit us in a couple of days here, we would see expansion of this, like Friday's SPX volatility. It's 8.7. There's a jobs report coming out and the volatility is still 8.7. All right. It's getting some of the lowest volatility ever recorded. Now, flipping things around a little bit, I did a TLT trade and I do want to elaborate upon that TLT trade. So I talked about this over the weekend and told you I'd follow up on it. I did a bullish trade inside of the TLT today, and I do want to show you a little bit of that bullish trade. I bought the 118 calls, sold the 120 calls. Okay, you could trade that for right around between 94 and 95 cents for this. It's an in-out spread. It is a bullish spread inside of the TLT. Again, buying the 118, selling the 120. It's a bullish spread for the next 38 days inside of the bonds. Why bullish? I know everybody likes to ask that. Why bullish? Hey, why not? I said there's really no technicals and so forth. Okay, the setup might not necessarily be there. The idea is very simple. All right, listen, there's a very high probability that the interest rates are going to go up. Now, interest rates going up take these TLTs lower, but the whole world has already priced in the fact that there's going to be ultimately this interest rate hike coming in about 2 weeks. Nevertheless, it's even less than 2 weeks now, but nevertheless, okay, when you take a look at this, if it's already priced in, good, might give us some upside inside of the bonds. So, hey, whoever said Don is not bullish? I'm bullish, apparently in the bonds right now. So in the TLT, I'm taking a very small bullish position, paying 94 cents for it. I'm going to try to exit this thing when I make between 55 and 65%. That's 55, 65% of the 94 cents that I am ultimately putting into risk in the trade. So it's very straightforward in-out spread. I've executed a few today. I'll continue to execute a couple. You can see ultimately the volume in here, it's light, some 70 contracts. By tomorrow, my guess is after putting out this video, that contract size won't be light. And again, you got 38 days to laugh, to cry, to be right, to be wrong, but ultimately to make, again, that 55%, the probability, if you take a look at this, the probability of us touching is 77%. But, you might need us as high as 121 to make full 55% on here. And this is about a 60% chance of that occurring. So thanks everybody for joining us here at TheoTrade. Enjoy again. And remember, doors open. Will those bears take it? Thanks everybody. Have a great evening. Bye-bye.